Chris.
And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, February the 8th, 2023. It has been a difficult couple of days trading-wise. The markets have been fairly wild, have been making a lot of very erratic and at times seemingly misguided type moves, which actually has been tied to just various algorithms and how they are programmed and how they and when they kick in. And that hasn't presented a lot of, I guess, position trading or swing trading, but it has provided a lot of scalping and just really short time frame, like 5-minute chart type trading. But the moves have been erratic and they just kind of come and they go and they really fill in the blanks, which tells me that more algorithms are actually out there being focused on and used in terms of, say, like macro traders or other types of traders that are physically watching the market, entering orders and trading in a manner that way. Still algorithmically, but not totally controlled algorithmically from pushing the button, going out, searching trades and putting things together and going and then basing it on different points. Nonetheless, it does continue to hold to some Elliott. And so I continue to kind of look at it from a 4-hour to it from a daily down. And I even think on an hourly chart and then even compacting it a little bit further, it's still presenting patterns that are corrective. So that already makes it a more difficult process in terms of like, how do you want to trade it? And where do I get in and where do I get out? Because the patterns themselves, because there are a lot of ABCs, a lot of 3 waves, occasionally a 5-wave thrown out there, but very confusing in the process of putting it in. So this, again, suggests we remain in a corrective pattern. We have actually been in corrective patterns from the all-time highs, which is in January. So we've already now, we're over a year into just working with ABC patterns more times than we like to do, to put it more bluntly. But the market tends to resolve itself. And so I continue to look for this particular wave, which is following the characteristics and the personalities of B wave to a letter. And so again, I just encourage people is like have a really strong feeling or understanding about the personalities and the characteristics of these wave patterns. And the reason I say that is because, number one, they are being controlled by humans, and humans are in the market and we react emotionally. So the waves themselves do continue to appear, but we need to now connect the different type of wave. For example, we're in a larger B wave. So a minor or let me take it up to the daily, that'll tell me. We're in a minor C wave to complete an intermediate degree B wave. So the B wave itself is, for time-wise, is pretty big, and even in movement-wise, can be fairly large. We have some parameters, but it continues to work on its last phase. And true to form, it is covering all the bases in terms of what type of personality does this larger B wave have within its A, B, and C, which it does on its own. So then we add to it the wave characteristics and the personalities of, for example, a 3rd wave, but we can condense that to this zone. And the surprise is when it keeps violating or going above the zone and extending the zone, but it still holds true to a 3rd wave. So putting that all together, I believe we still have a couple of legs up to do. And so I'm going to, in fact, this 4 I notice how I've left it down here and not putting it necessarily up there, because what I can get out of this is like, okay, we have a wave A down, a B up, and now we're in that C wave down of 4. That would suggest that we kind of drift through this support at 41.16, 41.17, fall below 41.10, which is where the hourly 200 EMA is coming in, and then get ourselves below 40.99 or 4100. That remains kind of a floor at the moment. And it's held. It didn't even get down there today. So therefore it held again through today. Now, yesterday it had the 200 moving average right there with it. Today, that level would have pushed itself up if the algos were continuing to use the 200 EMA. Now, what is potential? Well, we could drop, and this can happen overnight, setting us up to really start over again. And we now, if it is an extension within the 4th wave, so if that's A, that's a B, and that's a C, the C wave can project down to 382 support, which is 40, 59, 40, 60. That already is an area, when you look at your book map and you look at other indicators, 40, 60, 40, 65 continues to show up. So we would just be dropping down to the next area across the board, and that levels up with Fibonacci. We can put a 4 there. And this, by the way, is what something I would think would happen by tomorrow, because again, on Friday, if I'm still looking for that 5th wave up, I'm still looking for that last lunge. And that's how I think it'll come in. It's going to come in like these. It's going to come in like these. It's going to come in. They're just going to take it. And again, this morning, we did have a slight rally, but it reversed very quickly and drove it down versus driving it further up. But it started out, and then the market just started to get hit all the way down. Now, so that keeps this all alive. If we can bottom, I'm going to be looking for the algorithms and other traders to kind of start stepping back in. And tomorrow's Thursday. Then we have Friday. Friday's the expiration. So tomorrow, we may spend it moving lower. We may spend it getting down to here. But I'm suspecting that it's going to hold, and that the real things are going to line up for Friday's expiration. Now, again, I'm going to start out. Let's start with the ES. And I look at the ES, and it should kind of go together with, so this is Fridays. And right now, 4150, that's not actually so high. But then we have 4200. See? Big volume today, up at 4200. So it remains in play. And on the downside, we have 4050, which is kind of where we're looking like maybe we need to come down and touch that and then launch. So maybe tomorrow we get down there and touch that. And again, you can come and do the same thing. You can go and you look to see, that's not that big. It's really, they're looking for Friday, and see where things begin to line up. Again, for tomorrow, they got it that where there's a possibility. So it's going to be stronger for Friday. I mean, if we're coming down here, we're looking at the 4050s, a little bit more, doubled it. But now maybe they're 4065. So you can start to see where they're stacking things. And 4065 on the downside and 4200 to the upside. Again, that's for tomorrow as well. So on Friday, 4200, a little bit heavier to 4220. Those are levels, fib levels that we have should this thing start to run and finish this particular move, finish that B wave and set us up for a C wave decline. So that's just in the S&P. Now, what also I will look at just to see if it can give me some kind of interpretation, right? Apple, because Apple, of course, if it moves, is the highest weighted stock in the NASDAQ at the moment because it's a cap weighted index. What do we have? We have 150. Okay, but above that, the big one was 155. So it goes up there and it flirts with it several times. But we have 150 heavy and 155 heavy. Beyond that, we got the 160 strike. And so do we have the 145 strike? Sort of. So we have 147. So downside, they're kind of closer to the 150. So right now, the range, I think, in Apple is 150 to 155. And with a push, it could go to 160, but there's not a whole lot sitting in those options, more so in the 55s. So now I'm just going to keep on going down my list. I got Microsoft very much in play, very, very much in play. What do we got? 270, which it was up and did test and got above. It got up to 275. Those remain in play, as does 280. Now we've seen it. Microsoft can add $7, $8, $9, $10 one day. Boom, done. Both directions, by the way. Okay. Still good volume. Heavier volume here in Microsoft continues. So as that continues, that remains in the picture. Now, also, we have Tesla broke 200 today. They're really going to be happy about that. Let's see how much of these 200s actually, now they're working on 210s. The 200s, how much actually was getting out? Take profit at 210. 200. Then we have 205, 210. Wow. So these now come into play. And depending on what the market wants to do, of course, it's going to contribute to the S&P getting up to the levels that it needs to get up. So we have Meta, on the other hand, they decided to go down. But let's take a look. What might they be looking for Friday? 190. 200 starting to drop a little bit out of the picture. So it's going to come down. Look at that. Total reversal in that 200s. They turned it. They're not, I don't think they're looking for 200 anymore. Boom. Let's get out. Moves down to 190. What do we got on the put side? 185. Okay. Well, we're below that. What comes up next? 180. So we'll see how that develops. I'm going to see this window maybe kind of form a little bit. So what was helpful a couple of days ago is now pressuring to the downside. But if it needs to get itself back up to 190 for expiration on Friday, well, that's also very possible. When down 8, it can go up 8. So you can start to see how I'm putting that together. So again, if we're going to get additional follow through from here, we should definitely come down and break yesterday's lows. So 40.98 definitely should kind of go by the wayside. We have that support here. We got support at 40.60. This is at 40.59. They work together in that respect. Option-wise, we see that there's a nice gathering right there as well. So we have what we're looking for to maybe contain it from here and now send it back up, because that upside target remains out there at 42.00. So what we have above that, we already know. We still have 42.12, 42, let's say 25 to 35, 42.50, and then up we can get on a solid push. And again, depending on which algorithms, which is going to be in control on Friday, we could get spikes that take us up there that likely won't last. But if we start moving up there on volume, then it's likely going to stay up there. So again, a lot to look at. Moving average wise, we are not in bad shape. We sort of came down. The 20 wants to cross the 50 there. That's only in the hourly chart. That can change. Both are kind of going flat now, right? We're not breaking down. So we got a flat 50, flat 20, and now working on a flat, flat 50, and now working on a flat 20. So over in the NASDAQ, all of the stock information remains the same. And what's going to help here, we've got the same story. So I just did some basic retracements for wave 3. Again, A, B, C, that would be A, and then we get an A, B, B, And now we're working our way lower in a C wave. First up, 12,430. Right below it, at 12,409, sits the 200. That one's likely going to be more pushed into use. 12,410, as a matter of fact. So we'll be looking for what may be sitting there, what type of orders may be resting there, which will help give us a clue. Support for a fourth wave, and I got to move this one now because it's not even going to line up with that. It's likely going to line up over here. I'll leave it right there, but understand that if it's coming down, we have 2,100, 12,000, excuse me, 2,100, 12,100 would be an area, 12,110 to 12,100. I would expect, if we're still going to get that leg up, that this is where it's going to stop. This is where it'll hold. Then for a wave 5, once I get a fourth wave solid that I can actually mark and move off of, then we're going to have clearer ideas for this fifth wave up. Now, again, I will put in some estimates, but understand they're guesstimates for fifth wave. And one more time, I'm just going to use extensions, go from there to there, and I'm going to just put it no, I don't want to put it, I'm going to put it right there on that 50. So what we get, 12,009, well, that was the previous high, so that still remains. But if I'm looking for a push, it's like you're going to go above that, and they're going to be heading for 13,000. So we have 13,100, 13,233, etc. These could be hard pushes, but you know what? It could be the blow off that everybody is expecting. So that could be the spike, get up there real quick, and then reject. But doesn't mean it won't get there, okay? It doesn't mean it can't spike up into these areas. But because of that size of that third being increased, it does really put out some strange numbers there. Now, let's put in one more. And these would be for the finishing of this intermediate wave B. So again, the 13,035 sits right there staring us in the face. Then we have 13,233 to 304. That one's good, but we got a double up here at the 1.618 and the 618 level, and that's around 13,700. Do I want to see it up there? Not really, and I'll show you why. The X wave, I don't want it going up there that high because we have 13,007. Let me see what this was. 741, 741. So this takes it above it. Both of them do. But it could get up there and still remain an A, B, C flat. It's going to make it really flat, which leaves us that we likely won't. We might dip below 10,000, but we won't hold it in terms of getting down, putting in a C wave, and then a primary A wave, and then loading it up for a B wave. So again, we'll be able to put these numbers together more cleanly as we come along, but let's keep in mind, again, personality of the B wave. They're not easy. As much as this on a daily chart, you're like, wow, look at that great rally. No, yeah, great rally, true. Lots of moves that were profitable, true. But it's not been easy since the second, when we topped out. It's not been easy. It's been a lot of chop, a lot of craziness, a lot of moves like, whoa, where'd that come from? Particularly yesterday. So I suspect that may continue as we can clean up this fourth, get that fifth in. Then I'm going to go with the hope that we return to more of everybody getting involved, macro traders, algo traders, et cetera. Everybody's out there doing their thing because it would be a tone change. It would be, now we're going to move lower, so we're not fiddling around with, okay, now are we still going to go back up? Are we going to go to this level? Are we going to go to that level? And when we leave it to just the algorithmic trader, well, whatever the computer gets done. And it triggers off a lot of different things. Okay, I'm going to leave this right here for right now. And we got a little bit of a pullback, but I am still leaving the room, leaving the thought, leaving the potential that we can turn and we can run and create new highs for the sequence and to complete that intermediate B wave up in these areas. Next update tomorrow, Thursday, February the 9th.